Hi, today is Monday, April 24th. Just providing a quick video update on the US dollar index and the euro dollar. It's If you look at the US dollar index, which is comprised of two-thirds of the euro, obviously what you've had on this weekly chart is this massive run up followed by um, you know a year and a half of basically horizontal until you had this what if I zoom in on this daily chart is it could be seen as this what if I zoom in on this daily chart is it could be seen as like a breakout situation here. um, Now what's happened is you actually had the formation of this head and shoulders, if you follow my cursor, and but following this head and shoulders, basically any pullback off the neckline, basically this pulled back to the upside kind of went up too far to really be considered head and shoulders, and the likelihood that this is just going to bounce and then just break down through this former neckline, now a trend line, is smaller than it was before. However, because you had resistance at this location where this trend line was being created, you now have this like descending flag or this wedge, and these are normally continuation patterns. So what that means is you had this prior trend that started from this low in May of 2016 up to this high of December 2016, and December 2016, early January, and you have this basically this flag pattern, which is a continuation pattern, meaning it continues the existing trend. So if the move started from down here up to here, that projects that this breakout is going to continue to the upside at a distance similar from this low to that high. Does that mean this will certainly happen? No, because the fact that this head and shoulders seems to have been negated makes the because one thing, that doesn't mean that this is necessarily going to break to the upside, because you simply have a situation where you have lower lows and lower highs. That's still forming up right now. However, you know, you have price, if I zoom in on a 4-hour chart, at support or very close to it. There's a 4-hour chart, that same zoomed in flag area. It's not quite at support, but certainly any approach of the dollar index down to the lows, down to this trend line, is very likely going to see buying, and that's where I would plan a long. Until then, a long doesn't really make sense, because your stop would have to be maybe below this low, and unless you're very confident that this is going to get at least to the midway point, that's a lot of unnecessary risk. Whereas if you had just waited, you would be able to get a much more favorable reward to risk ratio. Apart from that, if I look at the euro dollar, obviously is in a similar situation. I have this head, shoulder, head, shoulder, and I have a similar situation to the US dollar index, where it basically pulled back so far that this no longer looks like a head and shoulders. This looks more like some type of flag situation, like that, and on the downside something like this, where this would forecast from resistance a drop back down to the lows, and possibly at some point later a break below the lows. And so I'm not right now, there's not enough information to really say with a high degree of certainty which way this will break. However, this is resistance, okay? And so to buy the euro or to sell the US dollar in this area is very dangerous. You're just going to have a lot of people looking to go the other way at this point. But because of the trading in Asia, this is not really a good location to sell the euro anymore. So the best thing to do is just wait for a pullback up to the highs or higher in the euro if it gets there, or lower in the US dollar, like with the US dollars, with the dollar Swiss FX pair, and trade it that way. So anyway, good luck with this. I suspect that this will probably be kind of in this area if that does happen. Anyway, good luck.